But anything specific that you noticed?
Just one word, my mistake on Bajaj Auto, it's a 140 rupee dividend. So ex-dividend is still down only 120. So it should count as up 20 rupees. Likewise on HPCL.
Yeah.
I think the dividend in HPCL is 22 rupees. So the fall actually should be a rise.
Yeah, so well, on the market, I think let's see, because expiry day, so there will be many moves here and there. For now, the mid caps are doing well, so I think that's where perhaps people are focused on. Momentum is continuing, by the way. I think Mitesh's 910 call is working. In Colgate is a stock which is now among the top gainers. That's up about, in fact, it is the top F&O gainer, up 2%. There's Interglobe Aviation, crude plus perhaps change in ministry, that's helping. So, Info Edge, ICICI Pru, IGL, of course, news driven. So I think right now the focus is on individual stocks. The mid-cap index has a nicely upward trending chart, advanced decline at about 2.6:1. Mitesh, your thoughts on market opening, and is there any trade here, either on the index or stocks?
No, Anuj, as I said, I think, on the Nifty, I would want to see the index get past 15,900 before taking a fresh long. And on the Bank Nifty, similarly, 35,800 is the target to look at. So I think we are about 100 points away from 35,800. So we have some longs there, but once it crosses 35,800, then I think we might want to add on to long positions. So as of now, just holding Bank Nifty with a stop at 35,500 revised stop loss, and I think broadly I expect a positive breakout, possibly led by banks. Apart from that, I think mid cap is an area which clearly is buzzing, and maybe trader focus shifted to mid cap stocks.
Okay, Mitesh, thanks a lot for taking us to the market opening. Tushar Pradhan is joining us, CIO. HSBC Global Asset Management. Tushar, good morning. Thanks for joining us. Tushar, how are you deploying the incremental money? Because it's been a strong move for the market. Are you buying at these levels?
Well, at least thankfully for us mutual fund managers, there is always going to be incremental purchases. So I am perpetually a buyer. And I think that is how one should look at the market, is that would you buy now? I think the markets always remain a little bit in a flux, and I think there are many things, as you may have discussed yourselves, which are leading to pretty significant increases in valuations versus an average understanding of what we used to carry in our minds about the average. There could be many reasons for it. One is, of course, the easy money sloshing around. The second would be a very strong expected earnings growth momentum, which we are going to see in the next couple of years across the globe as well as in India. That is also going to be fed by an economic, upturn because of a lot of fiscal stimulus being available not only in India but even in the US, for example. So all of these things do indicate that we are in a situation where we should take a step back and say, well, maybe it is not overvalued because it is compared to my average of the past. I think we have passed through a very difficult period. These uncertainties continue. So not to say that it's absolutely blue sky and wonderful ahead. There are going to be lots of uncertainties. For example, the new strain, the Delta strain, is causing a lot of problems. New cases coming up are largely dominated by this strain. And how that will lead to economies and whether it will really have a problem going forward, we don't know. But as it is for now, I think it's just probably the lack of opportunity, the very visible nature of earnings growth looking ahead, probably which is fueling the valuation picture at the moment.
Good morning, Tushar. Good to have you with us. Where would you bet on? I mean, will you bet on things like banking because you're expecting, as you said, a decent growth? Or would you be more export oriented since it, at least for now, appears that the globe is growing faster than ours?
It's an interesting question, Lata. I think the export surge has been a little bit of a surprise because while we have been talking about a China plus one strategy the entire world wants to adopt, we haven't really put any numbers to that. We don't really know which sectors are the ones which are going to contribute to this growth, and what all are we going to export out of India, which is going to substantially change the picture going forward. I think we've seen pretty interesting, demand come from textiles. We are seeing a lot of, product, especially the petroleum product going out. We are seeing a lot of these exports also inflating our exports number going forward. But the picture is fairly uncertain. I mean, these are very early days in terms of establishing, which companies will continue to export with that kind of momentum going forward. But I think fine chemicals, specialty chemicals, I think these are areas which are very strong. However, they are not that big on numbers. But I think the traditional IT sectors and all of those which contribute to exports will continue to remain a bright spot. You also have to, imagine that the dollar remains slightly stronger throughout this period. But,
Tushar.
the opinions are divided whether,
Tushar, 1 minute.
a surge in the emerging markets will actually weaken the dollar a little bit.
No, Tushar, 1 minute.
So I'm not an expert
Tushar,
there. All I'm
1 minute, Tushar. What I'm trying to ask you is, would your weightage be IT or banks? Like banks is a domestic proxy, IT is a global proxy. Say, if you're taking two-wheelers, Hero Motor is a domestic proxy, Bajaj is a global proxy. So where would you weight more?
Yeah, I think that's another, thanks for clarifying. So I would think that, as I was mentioning, there's growth all over, right? So there is going to be growth in the global economy. When we talk about the US, for example, their propensity to spend on technology will also increase with estimated growth coming in their basic businesses. So that remains a fairly attractive space. But you should look at India as well, where there is a lot of liquidity now with the banks. We haven't seen a significant credit offtake for quite some time. However, most of the credit has gone to more personal type of loans or smaller loans. But the large companies, because of a lack of investment we've been calling this for so long, there's no investment drive as such. And I think if that actually happens, then we should see some very strong asset growth come back to the banks after a very, very difficult period. So that also looks attractive. I would be diversified. I would rather not take a call on domestic versus exports, as you call it. I think a little bit of wait and watch is extremely important because we don't know how these trends are going to follow. I would yet be a lot more comfortable on the domestic story. I think our banks are well capitalized at the moment, and they have a lot of learning behind them. So I think going forward in the next credit cycle, it looks pretty interesting from that perspective. However, valuations, as I mentioned, not in the best spot as we go along.
Oh, of course, that is correct. By the way, IT stocks are all soaring now. Tech Mahindra is your biggest gainer. HCL Tech, Infosys, all ahead of TCS's numbers, doing very well, and that ISG report that deal wins are at a record high for most of these IT companies. So that space is doing pretty well. But Tushar, I wanted to ask you a little bit about the auto space because names like Tata Motors are now down 10% this week, and there is this huge semiconductor shortage that's playing out. No one knows how long it will last. How do you approach this space now? Are you cautious here, or the global-facing auto companies is what I'm talking about?
Yeah, I think the constraint on the semiconductors is now quite a global problem, but it's not a permanent one. I think it is a matter of time before either you have alternative supplies come up or in some way we correct that situation. But what remains to be seen is, will the demand come down because you don't have enough semiconductors? If you don't have supplies, does the demand come down? The problem is there is no alternative. If you don't have a car, you can't really use anything else right at the moment. So I think it will remain a fairly constricted place, but I think it will only push your volumes into the following quarters. So it is not as if you will, kind of give them up altogether. And it depends on the semiconductor industry to kind of gear up and develop, enough supplies to be able to supply to most of the auto manufacturers all over the world. I think, the demand seems pretty strong. And we have seen our own example that once we come out of lockdowns, once there are, indications that things close to normalcy are coming back, discretionary demand really, really picks up. So I think I would clearly, be very positively inclined towards the more cyclical areas of the economy, including autos. And I think, they will find a way out of this shortage at some point of time.
Okay, Info Edge is surging now, by the way, 3% higher on that stock, so looking quite good. Tushar, yeah, absolutely. Tushar, we have this very large IPO, right? There have been times when in the past, massive IPOs have signaled some kind of a market top. Do you think we run that risk, given the kind of the surge of IPOs, and this one is a big one?
Yeah, I think crystal ball grazing is always, going to happen, especially when data points kind of accrue the way they are. And yes, there is an IPO boom, though not as much as what we've seen in the past. The IPOs began a little gradually, and now the volume is building up. There are a lot of new companies to look at, and especially the what we call as the new areas. And such kind of IPOs with a lot of hype and a lot of expectations always has led to disappointments in the past. But I think there is a difference there. I think people clearly know what they're getting into. If we've seen the kind of valuations that this kind of companies have got globally and how they've sustained over years, I think does give us a hint that pure earnings, the way we looked at the traditional valuation model, may not be the right way to look at it. I frankly don't know what else and how else to look at it. But just given sheer by the way the market support these valuations for long periods of time, clearly we need to do a lot more research to understand how the valuation has come to. But I don't think that, just because there are so many IPOs and, valuations are higher, are we expecting some sort of crash? It may yet happen, but all I'm saying is that that may not be the only reason. I think if you look back, there have been other reasons in the past which coincided with an IPO surge, which led to the crash. And maybe the IPO surge per se is not a reason to be worried about the markets. I think we should be worried about the markets if the numbers are not delivered, if there's a risk that we don't know appears and suddenly the earnings estimates are out of the window, or some such calamity which remains to be unseen. But I don't think the IPOs per se should signal any worry in the markets.
Okay. Well, a final question, Tushar. What kind of valuations will you stomach for Zomato? It's going to be a loss-making company, but it's our first encounter, perhaps, or first opportunity for one of those FANG kind of stocks. Not quite that category, but the nearest we could get. So you think a mega bite is possible here?
See, as I said, it's extremely difficult to ascertain, because in the traditional method, we had an earnings picture, and then we would assign a price to what that earnings is. Now, most of the valuation is dependent on the future, which means that not currently now or even a few years into the future will we see earnings. So how do you price? Are you pricing earnings, or are you pricing disruption? So I think you have to remember that these companies are working in a duopoly situation, and that may change in the future. But it is very difficult to get that sort of leadership again. So you are going to pay a premium for that. You're going to pay a premium for a company which has been successful over all of this time, and a lot of adoption has happened already. And then you cannot ignore the fact that they are in India, where the large nature of the market itself is likely to sustain these activities for I don't know how long. So I think the picture is a lot of fuzzy logic to it. And if you look at losses, and going back to your example, Amazon, which is a very, very famous example of how long the losses carried on, and yet the valuation continued to hold and continued to increase over a period of time, till the time came where the earnings came back. I think it was like 15 or 16, I forget, maybe 20 years before we saw those real earnings come through. So the jury's out in terms of, is Zomato another Amazon? I have no idea. But clearly, I think we should not ignore just because we don't have the traditional ways of valuing a company.
Yeah.
I think there are other elements that one should look at, and the risk is, of course, on the investor. So caveat emptor. But can you stop a train trying to be in part of a rail track which is going against you? Might as well jump onto the train.
Totally. No, it's just that I'm less worried about whether it will become a Amazon, but I'm more interested in knowing how much the market is willing to give it in terms of valuations. But I guess we will soon find out in a matter of hours, maybe, not even a week, not even days. Thank you very much, Tushar Pradhan, for joining us. Stay safe.
Thank you.
Okay, now we have a sector that's just been top of the mind recall for investors, and that is power. everyone is just powering ahead to get a chunk of the power space. What's keeping this space sticking so much? We're getting perhaps the biggest man in the industry, Praveer Sinha, Managing Director and CEO of Tata Power, joining in to discuss the FY22 outlook.